What's going on, guys? It's your boy SVJ. You already know, back at it again. Guys, this is day 5. You already know. We're killing it. We're showing y'all everything little by little. We're gonna keep doing it, guys. We're gonna keep uploading videos every single day that I can't do these videos for y'all. Just stay watching them. Watch them all completely, guys. From the beginning all the way to the end. Don't skip it. Take notes. Do everything y'all gotta do. You already know. So guys, today we're talking about liquidity in the market. Swing lows, swing highs. That's where the market grabs liquidity. I'm gonna explain to y'all how big banks like to grab liquidity, how the big money whales like to grab liquidity and take everybody out of the market. Small guys like us, like small traders like us, they love to take us out. They love to hit our stop loss. They love to, if you don't know how to go with them, they love to take you out, guys. I'm gonna explain to y'all how to avoid that, and I'm gonna explain to y'all what is a liquidity grab. So we're in the charts today. Remember, I'm gonna explain to y'all about liquidity right now. So guys, liquidity is always resting on the highs or the lows. Liquidity is always resting on the highs or the lows. So you're gonna see liquidity always in the market on the highs or all the way in the lows. That's where market and big banks and big whales like to grab liquidity to continue their way up and take people out of the market. They grab liquidity on the top or the bottom. So let me explain to y'all how this works. So as y'all can see right here, let's say you would have entered a position, right? A sell position, a short. A short means a sell. You would have normally entered when you see a breaker structure to the downside. You would have normally entered right here, right? And you would have put your stop loss above that high right there. Let's say, or not that big of a stop loss. That's too big of a stop loss. You would have put your stop loss like right there. Let's say, bam, around that area, and you would have target, let's say this low right here, this recent low. You would have target there, or you would have put whatever you want. Okay, so check this out. You would have got in right here, bam. Market would have been on your favor, and what the market did? Market literally retraced up again to your entry point. If you would have been break even after you would have been making money already, you would have got out, or it would have stopped you out still, because you see how market came and grabbed liquidity again and came to your entry point and to your stop loss to take you out. It wanted to come for this high right here, but it didn't end up coming. It didn't have the, I guess, it didn't end up going for it. And after it took everybody out, it decided just to go your way. However you was thinking, it decided to crash all the way down, guys. Literally crashed all the way down. You would have made so much money if you would have put a bigger stop loss above those highs at least. But that's a really big stop loss. Normally people put their stop loss like right there. Banks knows this. A lot of banks, and that's how they grab their liquidity. Like a lot of these big institutions love doing this. Like they love grabbing liquidity on the highs, go down, and then come back up, take everybody out, and then boom, done deal. They make all their money. They take everybody out of the market like that. All of us traders, they grab our liquidity. We liquidity to them. All of our small traders, normal people are trading on the markets. They take them out, and boom, go their way. That's why you have to trade with the banks. You have to know when the banks or this big institution, I call them banks, but they're big whales, because the banks are the ones that move the market, so I call them banks. These big whales, you gotta know when they gonna sell, when they're gonna buy. You gotta go with them. You can't go against them, because you're gonna lose all your money. It's always gonna hit your stop loss. I said. So look, that was an example to the downside. Remember, this is liquidity right here. Liquidity. Okay. This is liquidity right here. Remember, to the downside. Now, let's say you would have took a long position. Long position means you're going up. You saw a breaker structure to the upside. Let's say your entry point would have been right there. nearest to like right there your stop loss, and you would have been aiming this high right here, this nearest high, let's say in a sample. Look how market did. Market literally boomed up, you would have been in profit, and what it did after, it came right back down, took everybody out that got in right here around this area, took everybody out, grabbed liquidity, how I was telling y'all, grab liquidity, and it just shot back up, all the way up, all the way up until it made its final and just boomed all the way up. That's crazy, guys. That's how markets work. Let's show you an example. Like, let's say we would have been on a live trade type of thing. Let's say we would have been on a live trade. So when I take a trade, I always go to my 1 minute time frame when I'm about to enter. Let's say I would have got in right here, right? Boom. Would have aimed this high right here at least, second TP right here, and third TP all the way up there. I'm aiming this high right here, this previous high, right? This is what I'm aiming for. Put my stop loss like right here above this low. Okay, perfect. Look how market plays out. Look at this. Boom. Came back to my entry point, right? Took me out. The market decided to take me out right there, as you can see. And then what it did after it took me out, bam, it just continued going on. Look at this. You would have been in break even, you would have got taken out too. If you would have been in break even already. Bam, taken out. You would have been super taken out already. And look what it just continued doing until it just went all the way up. And where did I left off? Until it just continued going all the way up, guys, all the way up to those highs that I was aiming for. It came for liquidity again. Literally from down here, shot all the way up to my target point, but it took me out because market likes to grab liquidity. Exactly how I said. Market always like to grab liquidity, guys. That's why I always say, wait for that pullback, that 5-minute pullback. Don't rush into the trade. You gotta wait for that 5-minute pullback, because let's say you see a break of structure, a reversal, bam, you enter a trade, you're making money, and then it just comes back to your entry point, and then it hits your stop loss right away. That's why you gotta wait for that reversal. You would have waited for this reversal right here. You would have got in right here around this area, like right here, because you see market went up, reverse again, and then it just decided to go up to the target point that I put. But that's what people be taking a trade right away. When they see a reversal, they take it, bam, because they're anxious to take a trade. They want to take a trade so bad that they end up losing. If you would have took a trade, let's say you would have put your stop loss below these lows, okay, you would have had a huge stop loss. That's a huge stop loss. But let's say let's say you were risking little, like 1 micro. That's nothing. You're not even gonna lose $100 in that trade. But let's say you're trading minis, and 2, 3, 4, 5 minis. That's like $5,000 right there that you're gonna lose, or I don't know how much. I don't know. I'm not calculating right now, but you will lose a lot of money. It depends, man. Like if you want to catch this trade since the beginning of the play, you gotta put a big stop loss. But I don't suggest nobody to do that, because you're gonna lose a lot of money if you're trading minis, and it depends how many contracts you're trading. So if y'all take these trades, remember, wait for that reversal, guys. Wait for that 5-minute pullback. You're always gonna see that 5-minute pullback. Always. The market's always gonna show you that 5-minute pullback, guys. Remember, this is called liquidity right here. Liquidity 2. This is liquidity. This is liquidity. Swing low, swing high, guys. Remember, market always like to grab liquidity. It's either gonna go for London's highs or lows on New York section when it opens. Is either gonna come for one of those two, London's highs or lows, or pre-market highs or lows. You already know. I'm gonna teach all y'all everything little by little. We just starting step by step. Remember, you cannot run right when you born. You have to step by step and then walk a little bit and then run. You got to do everything little by little, guys. Remember this. That's why I'm going step by step, teaching y'all game, giving y'all free game, so y'all could guys understand. This is a list that I have for y'all here that I want y'all to write down, take notes on it, take a screenshot, do whatever you got to do. This is super important. This explains to you what liquidity is. So liquidity is orders that are resting and big money in the market. Exactly what I was telling y'all when I was explaining to y'all right now. Money as in the banks. It's big money, like big banks, they have a lot of money, they move a lot of money in the market. Right here, third one, banks are the market mover. They are moving with ton of money every single day, guys. You cannot compare yourself to any of these banks. All these big institutions got so much money and so much power in the market that they always like to grab liquidity. So liquidity is always sitting in the market above highs and below lows, of course. I will explain to you, above highs and below lows. You're not gonna see liquidity in the middle of the market, never. You're always gonna see liquidity on the bottom of the market, trying to grab it, or on the top of the market. Liquidity sweeps. What is a liquidity sweep? A definition, a liquidity sweep happens when the price moves to an area of liquidity, like a previous high or a previous low, to trigger stop loss orders and collect liquidity before reversing. That's what I'm telling you. It loves to hit everybody's stop loss, right? And what it does, after it hits everybody's stop loss, it grabs liquidity, bam, charge these batteries, and then boom, goes your way, or goes where it wants to go. So I'm telling y'all guys, same thing when it comes to the downside. Grab liquidity right here too. Boom, all the way to the downside. Easy and simple, guys. This is not that hard. If you guys really pay attention to what I'm saying, you guys gonna understand everything I'm telling y'all. Look, importance. This signal a potential reversal point as big trades execute their orders. Big banks execute their orders. That's what that means, guys. Why the matter? Reversal signal liquidity sweeps can indicate potential market reversal, so we can catch the whole move. The banks always trying to take liquidity from everybody so they could go wherever they want to go. They want to go down, bam, they're gonna grab your liquidity, take you out, take all the traders out, all the small traders, take them out, and then go their way. Bam. Exactly how I'm telling y'all. Using liquidity and liquidity sweeps. 1. Identify levels. Mark significant highs and lows. I'm gonna teach all y'all that. And all the levels on the chart. This is really important, guys. You have to mark your 4-hour highs and your 4-hour lows before market opens. I always tell y'all on every video that I make, on every trade breakdown, I be saying I mark my 4-hour high and my 4-hour low. Always, every single day on market open, before market open, like around 9 o'clock, I mark my 4-hour and my 4-hour high and my low. And now I know it's either gonna go for the highs, London highs, or London lows. We're gonna explain to y'all that. Second, watch for sweeps. Look for sharp movement to the level and observe if the price quickly reverses. That's it, guys. That's all you have to do. Write this down. Take notes, guys. I really want y'all to put attention to this, because I'm giving y'all the best game out here, man. Like I'm telling y'all, you guys are going to become profitable if you keep watching my videos, and if you put in the work, put in the effort, quit bad habits. How I was telling y'all, do good habits. You're gonna do this in the market every single day and repeat yourself every single day. I'm gonna create a blueprint for you guys, so you guys could just do it every single day. This bootcamp is gonna help y'all a lot, guys. I'm telling y'all. This is liquidity sweeps and liquidity grabs, guys. Y'all already know. Super easy. If y'all got any questions, comment down below. Whatever question y'all want, and I will answer. Or go on my Discord, my community, and ask me questions. If y'all got a question about the video that y'all didn't understand, or go back in the video and watch it again. Do what you have to do, guys, so you could guys understand and learn. I'm trying to do this the best way I can, guys, because you know I'm not a teacher. I'm just trying to teach y'all something really good that I know of, and I'm trying to put everything together for you guys, just for you, all for free, guys. I'm trying to be a teacher. I'm trying to like make myself learn how to like teach but this is really hard. You already know. I'm trying my best, but you already know, guys. See you on the next video. Tomorrow we're doing number 6. I'm dropping that tomorrow. You already know. Y'all be safe and like and subscribe. Don't forget to like that button and hit that subscribe button if you haven't. Peace.